What's going on, YouTubes? It is time for another recap. So, start off with the old Discord here. We had a pretty awesome morning so far. We had some good callouts about 6:14 a.m. And for the last video, we're looking for that 100 EMA tag outside of the 100 fib, which we'll go over here. But some of these Discord calls here were quite nice. We had some weakness continuation that we're calling under the 21,300. I was calling near 21,100 for the early, and 21,200 could be easy one today. Easy for 21,200. Now, we were calling that about 137 points ahead of time, so that's what our outlook was. So through the Discord this morning, in pre-market, we're knocking these trades out, going over the breakdowns here. We share our P&L. We post our entries and exits, our group P&L here. Everything is tagged. So we had a really good morning here on all the calls. We knocked out about 4,000 something by the end of the day. Took 5 greens and just a couple little reds today. I don't know why this is loading so crazy over here. Solid. Okay, so, why won't they come back over? No, MacBook stuff. 16th time, that's the charm. We got the X over here as well. So this morning, talked a little bit about our Discord trade, talked about the weakness, and this was the trade plan right here. It's over under yesterday's close to yesterday's lows. That means it was the wick range, right? And trade call plan going well for the Discord. And we want to drag potential to the 100 EMA. We didn't get that one today, but let's talk about what happened either way. So this morning, let's just get ready to do it here on SPY. We have this magical purple zone that we have here on X, right? And I wanted to go long, and what I left my, there we go, what I left my group with was this. So 10 a.m. we were done, and why we posted so many pre-market trades and we were so bearish in that pre-market, we caught this little bit of wash, is because we had FOMC, right? And FOMC usually chop fest the day until about 30 minutes before FOMC, then it starts going bonkers all over the place. So this whole choppy, stoppy, nasty nonsense wasn't very tradable, so we did a ton of pre-market trading today to get a lot of those greens. And then for the remainder of the day, yesterday's close and yesterday's lows. These are the two biggest key points. And before I left my group at around 10 a.m. Central here for the slow day, tried to get back for FOMC, but life is life. We said anything above the purple dash line VWAP would go long. We drew how high I would want to see it. So this was the green candle. And again, I told my crew late day FOMC, we could get a squeeze up to the target of 5969. And we had an algo fill that we needed right here. So you see 596892 algo fill. That was the long call. Here's another big green bar, as I like to draw these pretty pictures for chat. So we seen anything above this purple VWAP long into 5969. That's the last call I had given. Now, if you look at the price action in the trading here, you can easily tell that that was not a good trade day to the slightest. There was nothing there. We had talked about a couple algos that we have on the bottom side here. These were left open and needed to fill, so I assumed we would come down here, and this is where we needed the progression, right? Under 59.28 would have led us down to 5886.75. Now, we can still get there. There's a short day tomorrow for the holiday, or no day tomorrow, I should say. Short week for the U.S. Stock Exchange. And then Friday, we could still be looking into some weakness. So let's go over a couple of those key points. But again, just a note, these really big, nasty wave FOMC days, you got to be very careful with. You got to pick out these algo plays and only trade when they happen to come into those zones. Like I told my crew today, over yesterday's close on SPY is the only time you should be going long here on the ETF. And of course, we trade ES during that. So you can see whenever this did actually peak over that yesterday's close, it had a fat candle scalp for the breakout, fat candle scalp for the breakout, another one when the Powell man's talking in the FOMC. So long story short, let's talk about that daily chart, right? So we had the 3 down pegged, and the 3 down, as we always like to say, right, higher, all-time high into a push. Sorry, I've been up for 17 hours here with the kiddos and life. Down 2, up 3. Okay, so we did get our 3 down. We talked about this in the last 2 YouTube videos. That's 1, 2, 3. Now, the third pull down doesn't have to follow through. There's nothing in the rule book that I have that says the third push down happens to just wash away and fall. Now, we have a certain rule set that we need here for this Fibonacci playout. So I'm just going to give out the predictions because we don't have a long-winded breakdown here for the remainder, but this candle, the one that we got 2 days prior, obviously the 7th here, this is going to be the Fibonacci candle you want to pay attention to. That's the big red we called on the gap up day right here on 1/6. Now, this Fibonacci is going to play out accordingly to the most support and resistance and trend that we have. So today's body is what I'm going to mark out here on SPY. And then you're going to want to see whatever futures doesn't really matter. It could dump out and continue trend, but if not, we'll show you where it's going to go. So generally speaking, when we have a large wash day like we had seen it yesterday for that short call, we come into the next day and it has like a chop fest, right? And only two things happen. We look at yesterday's close and yesterday's lows. FOMC is the one thing that stopped perfect technical analysis today from playing out. So we don't take these days super trade heavy seriously. We try to get a little bit of money, get out of the market. Now, this doji body, which was put in today, it's a fat body, about 589 center there. This is going to be the over under. We need to utilize this doji body for support to make it up to 591. So as I was saying, I'm looking for that 591 push today long, or we needed to leak under 586.72. I got excited when I seen the big dump on the FOMC, and I'm like, hell yeah, we're going to go to that 100 EMA target down here where the gray box is, because we've been waiting for that. But we can't get there unless we smoothly get outside of some of these fib ranges on the daily chart, right? We got to cut her back down. Now, not to say we can't get her there. Nothing goes in a straight line in the stock market, but this little fresh low to push lower high and come down, we already got our 3 down. Now, the 2 scenarios that can happen here on a 1, 2, 3 down, and again, we got our 3rd leg down that we called for the push. It doesn't always have to go to lower low. We're still looking for that 100 EMA, right? And we got a perfect candle right now to play off of, in my opinion, for 1.7. So what it's going to look like is the daily chart is going to utilize this body right here, and it's going to come up to the golden pocket. 2 things are going to happen at this golden pocket. We're going to utilize this whole golden pocket, right, as an over-under. I want to see price action either hold above the blue zone here, push back up into that golden pocket, make its continuation down to the 1618 and the 100 EMA, 579.27, so on and so forth. That would be fantastic. The only other thing that we see is we get a random full back on bull move after this broken head and shoulder, because head and shoulder patterns have not been working out, and everybody and their mom is talking about this one, and it's generally been speaking with some of the most bullish patterning we've seen on head and shoulders in the last 5 years here. It doesn't matter what time frame you're on. So very less likely to see head and shoulders break down right now. Especially with inauguration coming up, and we usually get a pretty decent run. So we're going to go over some historics there on Saturday for Sentiment Part 2 if you want to learn about why January Republican holds will be a little bit different. So tune into that. So the second prediction, besides coming up from the blue doji, coming into the golden pocket and maintaining a downside to the 100 EMA, because we are on trend for potentially that, is to get above that golden pocket and back over the moving averages, and it does a random squeeze out back over to 600 plus. Now, we failed 600 from this gap, 598, failed the rejection of close to 600 here, and we're coming on the way back down. So still in sell range, right? The only bad thing about the sell range is, as we called for our group today, the VIX was going to move that standard deviation to the uptrend. So you see these lines right here. This is the standard deviation. They're green right now on the second leg instead of red. So you got the 0, +1, +2, +3. And of course, these would be red if the standard deviation lines were like this, pointed to the downside. But we are in bullish territory for the volatility index. Now, if you caught the last couple of videos, we said long from 1588 was going to be very key for the VIX. Yesterday, that did push, and we were super hot today as far as standard deviation is concerned, pushing into the +3. And VIX has a very hard time maintaining that. So we got a really small range day where it didn't really want to fall yet on the market. So with the volatility index, the way it sits right now, we are still getting a little bit of upside, right? We're not cracking under the 50 RSI. We're not getting some really nice sell waves. We're actually getting a higher low and a little bit of a press. Now, we didn't break through and hold above 19 yet, so we're not going to chase this down. But when we get the leg down in the market, I do have targets from 29.93 and 98 to 20.35 for the volatility index. Once you see the VIX go for that, that's when we're going to get that 100 EMA. If we stretch it out here a little bit, these are right up here, and these are a bunch of imbalances that need to fill volume orientation with gaps. So when we see that pushback up here, let's delete this call that we had right here. So we do get that pushback up. Hopefully we can see it. Now we do have one gap right here to worry about on the day, and I think that was the only one left open for the day. Yep. So when the VIX does open up and kind of peaks back up a little bit, we'll end up at 1815. If it uses 1815 as support and to continue, that'll be the catalyst for the continued upside, right? Now, for that to play out, my option 1 right here, that's still going to be the one that kind of pushes into the golden pocket. We'll see what futures do. We're not going to get a day tomorrow. It's obviously going to be Friday, so many things happen. But if you remember the same scenario, and I'll play this out again if you missed it for the last part of this video here, was remember the Powell candle right here? That was the big drop. And what had happened was, if we delete this, make it a little cleaner here. What I'm saying with these candles, for the breakdown that we had just called, anything above the blue zone back to the golden pocket of this candle at 1.7, that's the same theory that the Powell candle had. And I'll explain right here for a no tag. So notice candle Powell was put in, bam, right, 12.18. 12.19 puts a small candle inside and doesn't go fleeting down, doesn't have any continuation. But also, if you notice that first candle, because we love daily Fibonacci's, Powell, second candle. Notice the second candle did not go up to the golden pocket right here. We actually fell short of 593.68 for the Powell candle and never tagged it. So algos don't really like that if we're not on a trend for it, if we're not on some kind of CPI crash, the world is ending. We do need these algorithms to pick back up and usually chase down these fibs. So what happened? We opened up super low, trapped all the shorts, and slammed all the way up into the golden pocket. Because when we do get a massive candle like this and we maintain above yesterday's lows, right? So if we were trading this day on the day after Powell day, we look at yesterday's low, the Powell candle, and anything above that yesterday's lows generally pushes back up to the golden pocket. So today, you've seen the very similar play out where we missed all the golden pockets right here on 1.7 candle, and we put in another little inside candle. So that means this body, and of course, this low here of 586.72 are the almost identical playouts of what we've seen for the Powell candle. Big red dump candle, right? Inside tiny day, right? Didn't make it up to the golden pocket. So the next day, short trap, right? Comes closer to the 100 EMA, shies it, rips for 4 days, comes to the golden pocket, fails the golden pocket. But again, it holds the 100 fib at 585.79, picks back up, lower high at the golden pocket. And we discussed why this happened for the gap up in the moving average backtest and why it would dump. Now, back to our dump candle here. That same scenario could potentially play out here for this candle because we have no tags on a decently sized range body. And I really like to use the fatter bodies here. If we get dojis, we use the bodies themselves. But if we get a massive chunky body like we have here, we generally want to see the high-low of this candle be first tag. So if you are obviously looking over here, the familiarity just on a smaller scale, you can see it pretty clear. So if tomorrow, again, we're going to have two things that happen. We're going to have no U.S. stock market trade, so we're not going to get another candle here. But Friday's candle, not tomorrow, I keep saying it, could potentially hold that blue zone, rock back up, or even set us up for kind of a gap push. I don't really see a gap push. I kind of see us kind of floating around here on ES and not doing a whole lot, and then putting in a Friday candle that goes to the golden pocket. Now, let's take a peek here at the ES. Let's just do new drawing set. There we go. And we can take a peek at what I would look for here because it's going to be open on ES and not on the SPY. I can't see anything on my microphone in the way. Alrighty. All-time high, Powell candle. Very similar, obviously, is going to be almost identical to SPY. So we have a couple over-unders to worry about here on ES. Now, we're going to have a trade day for tomorrow. We're already open, 5 p.m. Central. It's been open for about 51 minutes. We're getting a little bit of back and forth here, a little down, a little up, chilling. Now, I want to see a golden pocket tag and a climb to this candle first. It's the same thing, yesterday's candle, right? Boom, boom. So if we hold above 5934, that will range up into the golden pocket and then just kind of chill. And we're going to kind of see what happens when the futures close and open then for Friday, because that's going to be the next market day. So if we go into the intraday charting here, we have an opportunity to see where that golden pocket is nice and clear and is close to that 50 up here as well. 50 SMA daily, 50 on the golden pocket. So what you're going to want to see is, again, the same scenario play out. We want to see something move above yesterday's close, which is going to push us above that big body, and we're going to drag it up to 5977 potentially. If we go under yesterday's lows and start random cracks to the downside, we don't want to chase down the golden pocket. We're going to go straight jumping for this 100 EMA down here on SPY, not quite ES. we're going to see that 100 EMA become a player under yesterday's lows because we got that nice fast crack on FOMC, didn't get any large continuation through it to go chase down that 100 EMA on SPY. So let's take a peek real quick at some of the longer standing 15s. When we look at MACDs and RSIs, we try to find a little bit of help. And what I like to do is, of course, have this 50 pinned out. There we go. So halfway on the RSI. The 15 is actually looking so-so. If it were to make a little bit of a healthy wave above the 0 level and recover some of that 50-way RSI, we could stay above yesterday's close as the plan would state for all day tonight and tomorrow and move up into that golden pocket range in 50s and just kind of sit. If not, because it is not a U.S. stock market trade day and we're not going to get a candle on the SPY or the QQQ, we could see ES actually just dive all the way back down and just kind of do some really low hover chop like this. And then when it comes to Friday, we're going to peak back up and then have a chance back at maybe even retesting 6,000 because of how close it is to the golden pocket, right? So that's the whole prediction. I'm going to lean slightly long. We didn't get our low break. We didn't get the flash to the 100 EMA quite yet. It's coming. I'm still going to look for somewhere between 8 to 12%. First of a pullback, the lowest we've made from highs is like 4.5%. And if we don't get it in January, I know when we're going to get it in 2025. So stay tuned for that prediction later on. So thanks for tuning in. If anything this sounds good, you want to trade with us live, learn about the FOMCs, learn about the pre-market trading that we do, the algos, the fibs, the links in the description to join us live. And then if you want to come for the free calls, I'm totally cool with that too. Tune into the next video and we'll watch for this golden pocket long to hit. And we'll see you then. Take care.